Hello everyone, welcome to this episode. First, let's take a look at the US Treasury market. The yield on long-term US Treasury bonds continues to rise, with the latest yield on the 10-year Treasury bond reaching around 4.73%, while the 30-year Treasury bond yield has surged to 5.316%, marking a nearly 19-year high since 2007. The significant rise in Treasury yields reflects deep concerns in the market regarding the US fiscal situation and the supply-demand structure of US debt. The US federal budget deficit continues to expand, with the total public debt nearing the $40 trillion mark, placing a heavy burden on government interest payments, which prompts investors to demand higher risk premiums. At the same time, the latest data shows that major overseas creditor countries like China, the UK, and Japan reduced their holdings of US Treasuries by more than $60 billion in June. Coupled with tech giants issuing AI corporate bonds diverting funds, the Bank of Japan may continue to sell US Treasuries to raise funds for currency market intervention, and the ongoing US-Iran conflict may further increase fiscal spending and debt. Multiple negative factors have significantly pressured US Treasury prices, driving yields higher. Now, let's look at the gold market. The spot gold price is currently consolidating around $4,400 per ounce. Previously, gold prices surged above $4,430, but then retreated from the highs. The 60-day memorandum of understanding reached between the US and Iran has officially expired, and US President Trump has publicly stated that he does not seek an extension, leading to a stalemate in geopolitical negotiations and a rebound in oil prices. The surge in long-term Treasury yields and the rebound in oil prices have reignited inflation concerns, which theoretically would exert some pressure on gold prices for a short-term breakthrough. However, due to the ongoing deterioration of the US debt situation, some funds from selling Treasuries have opted to allocate to gold, and the uncertainties in the geopolitical situation also provide safe haven support for gold prices, resulting in gold recently rising amidst fluctuations. Under the influence of multiple factors, the trend of gold has become more unpredictable, and it is expected to oscillate between $4,350 and $4,450 in the short term. The latest Federal Reserve meeting minutes to be released this Thursday will become the core focus of the market, providing key guidance for the future monetary policy path of the Federal Reserve, and potentially triggering further volatility in the gold, silver, and bond markets. That concludes this episode. Thank you for watching, and see you next time.